Hey everybody, this is Luke Myers here, making my first screencast video. Finally got some software, moved into the new place, and thought it was about time that I put something together. Trading's been moving along well. I've been really coming together as a trend follower, understanding really how it works, how to be disciplined, everything like that. Really fine-tuned the details of my system, and I really just wanted to share that with everybody. Basically, for those who don't know, trend following is a systematic or a mechanical technical trading method or system. When systematic, it tells you when to get in, signals you when to get out, how much to risk, where to place your stop. The whole entire thing is rules-based, mechanical. There's not really much discretion involved. How much discretion you put in is your own preference. But personally, trend following is largely mechanical. Now, anyone who's looking into trading the E-minis or the S&P 500, futures, or any futures for that matter, should consider a few things before starting. Obviously, how much capital they have to start with. Now, when I trade 1% risk per stop loss. So I trade a 15-minute chart, and when I originally started trend following, I was trading a golden cross system, which was a 50 EMA crossing a 200 EMA. And I originally built it for a 5-minute time frame, which I found to be too short, too highly affected by intraday activity. The 5-minute chart is just all over the place compared to larger time frames. They're not as easily pushed around by rumors, news, earnings, intraday stuff that is on higher time frames really considered noise. So anyway, let me get into the system a little bit here. This is about almost the last 20 days, I think like the last 17 trading days. And this system, as I've gone through the charts meticulously over the past 6 months of data, marking with these little circles and squares where the trends, how many trends there were per month on average, how many signals won, how many signals failed. This is the system that I've probably studied the most and taken the most time analyzing. And on average, of course it varies all over the place, but it averages out to about one trade every 2 days for this type of system. Over a long period of time, 30 to 40% of those are going to be winners. It varies. Sometimes it'll be 50%. I think last month there was a 50% win ratio. The month before that, it was 30% win ratio. The month before that, it was a 60% win ratio. So it fluctuates quite a bit. But I think it's kind of a little bit closer to 40% win ratio over a long period of time. And you'll have periods where you have 100% wins. You'll win one after the other. For instance, here, this was a big win, 40-point move. Then you had a small win here and another big move. 3 wins in a row. And then, bam, we get this consolidation. Now, if we go into this period of consolidation, this is where we are now in the S&P 500. This is about the last week. We topped out Monday. I think I got out and went short. I don't really recall how much I made on this trade. Actually, I think I made about 3 points. I think I got out somewhere in 14.10 or something like that. And fundamentally, we're waiting for the results of the fiscal cliff, so it's hard to say how long we're going to be going sideways for. We're up right now, and it could keep going up. 20-point move on who knows what kind of news or rumor, or just that everybody decides they want to buy before Christmas. Who knows? So you really just follow price. Now, basically what this system is, to give you a little basic few details, this green line is a 30 exponential moving average. The red line is a 15 EMA. So the red and the green are the 15-30 system. Again, this works really well on the daily charts. The person that I got this from uses it on daily charts, primarily because it's so responsive, hugs price. They don't really recommend using it on anything under 15 minutes. You can use it on 15 minutes is probably the lowest time frame. I was trading this for a while. Did make some money, but then when it goes through these kind of choppy periods, it loses like any other trend following system. But the average wins are a bit smaller. Now my stop loss in the 15-30 system is about 2 points. But I found out that there would be times where I would get in on the 15-30 system when the red and green crossed, and then price would continue to go down and it would cross this 200. Now it would signal to me that a bigger trend was underway. So I was having a little bit of difficulty saying, well, do I follow the 15-30 system or do I follow crosses of this purple 200 EMA? And I found out that all the big trends were coming from the cross of this 200. That was the signal that a big trend was underway, and that you really want to hold on. So basically what I'm trying to say here is when you do have multiple moving averages on a trend following system, you have to settle on a solid set of rules and a solid set of moving averages to follow all the time. You have to be consistent in how you're following them. Let me make an example here. Now, if you would have got in here at the cross of the 15-30, the red and green, you would have actually got out in here. I think there was another cross down, or not, it's midnight. Sorry, right in here. End of day, the following Tuesday. So you would have got in, let's say, at 13:55, and then you would have got out somewhere at about 13:80. Now that's 20 points. That's a good move. That's $1,000 a contract. Now, for risking only 2 points, that's great. That's 10 times your initial risk. That's good. You're happy about that. But look at how far it kept going. If you would have stayed in and said, okay, it's going to bounce off this 200 EMA, and you're trading basically across between, say, this green line and the purple line that's across between the 30 and the 200, you hold it all this way, you could have got out here at say 13.95. You could have made between that would have been a 40 point move right there. So you would have made twice your money. Now with this bigger moving average, this golden cross, I would kind of consider it because it's trading across the 200. Anything that's crossing the 200, I think you could consider golden cross system. This would be a slightly larger stop. In this case, I would go with the 3 points instead of 2 points. Now, the cross of the green and the red, this 15-30, if I'm only risking 2 points, for me that's 1% of my capital. Now, if I risk 3 points, that's 1.5. That's a little bit high. I don't ever really want to go higher than 2%. But I'm willing for 1.5, especially if the reward is outsized. Now, if you trade one mini contract here, that's on 40 points, it's $2,000. And that was over a course of about a week. And of course, if you trade like 5 contracts, like 10 grand, 10 contracts, 20 grand. So you can see how these numbers can add up as you start growing over time. Now again, this you would have said, okay, well, for one contract you made 2 grand here. Then this is another almost 20 point move here. So you could have made 3 grand in these 2 weeks. So it was a very good period of time. But then here we go. Then we go sideways. Really starting, was this Monday? We started going sideways. Now we might get a break up here. We're getting a little bit of upward price action. You can see we haven't broke this support, or resistance I should say, this resistance line here. Now if we can break this overnight, we'll get a little bit extra momentum as people jump in. I don't know if we're going to get it. It's hard to say based on current momentum. We can go to 1 hour. 1 hour gives us a pretty good momentum reading. Pretty strong trend. Trend's just begun. Again, it's really hard to say here. It hasn't closed. It looks like it could be. It's an incomplete momentum signal. The past momentum signal was bullish, so we have to assume that it's going to be a bullish continuation. The trend's up. Very well could go up for a while. Hit the next support, which would be at 1420. I really don't think it could break past 1420 without some really good fundamental news. We're supposed to have the Fed. If the Fed's positive, that it could be why we're going up ahead of that. But who knows? It's all pointless speculation. But anyway, enough ranting. I hope this helps anybody who's looking into trend following or looking into information about how to trade short-term trend following on a 15-minute chart, trading E-minis or the Golden Cross system. I think the next lesson that I'll go over will be the MACD, which is my favorite indicator after, of course, my moving averages. Till next time, happy trading.